Goldman Sachs gets sacked in Apple deal to the tune of billions of dollars. Goldman Sachs, a prestigious Wall Street investment bank that caters to institutions and the ultra-wealthy, appears to have faltered since entering the consumer banking industry following its partnership with Apple to issue the Apple credit card. They recently announced a $2 billion pre-tax net loss on their consumer-facing segment for 2022 and have suffered losses of about $4 billion in their consumer banking division, despite being the expert in financial engineering and risk management for 150 years. So how did Apple, a novice to the consumer finance industry, manage to publicly embarrass Goldman Sachs, the undisputed champion of Wall Street? Hi, you've reached Finance Sense, the place where we discuss all the most recent trends in the financial markets and the economy. But before we get started, make sure to give this video a thumbs up, hit the bell notification button, and subscribe to our channel so that you can stay up to date with our new videos. Having said that, let's get started. Goldman Sachs is a worldwide investment bank that offers its clients a wide array of financial services in a number of countries throughout the world. Marcus Goldman established the business in 1869, and it has since expanded to rank among the world's most renowned and significant financial organizations. Goldman has long focused on investment banking, trade, and wealth and asset management as a leading Wall Street investment bank. Its investment-making initiatives are generally directed toward institutional clients, such as businesses seeking to raise capital through the issuance of bonds or a stock market IPO. For instance, as of the end of 2021, Goldman Sachs supported the enormous $30 billion IPO of Coinbase, the largest IPO in history. Here, Goldman's job is to connect businesses looking to sell stock or debt with buyers eager to purchase that equity or debt. The main target markets for Goldman's trading activities are hedge funds, businesses, and high-net-worth individuals. For traders wanting to execute significant deals worth millions of dollars, Goldman Sachs provides market creation and execution services. Imagine, for instance, that Burger King is concerned about the cost of white onions in the following years. They might approach Goldman and request that they devise a plan to mitigate the risk associated with the price of white onions for their onion rings. Goldman would then go out to their clientele to locate a trader interested in working with Burger King. Burger King would provide the trader a share of the estimated profit on the hedge, in exchange for the trader taking on the price risk of the white onions, and each of them would pay Goldman Sachs fees. Investments made by institutions and high-net-worth individuals are the main focus of the wealth and asset management industries. Goldman has historically exclusively provided any of their services to extremely wealthy institutions, earning them their elite position. It goes without saying that their investment banking solely works with businesses and other Wall Street companies like private equity shops. They exclusively work with hedge fund and high rollers, trade premier brokerage services, and limit their wealth and asset management clients to those with millions of dollars to invest. Goldman Sachs has dominated the investment banking sector for decades because of its innovative culture and cutting-edge technologies. Despite Goldman Sachs' long-standing reputation as a top destination for ambitious graduates from institutions like Wharton and Stanford, the firm has never placed a priority on consumer banking. Goldman's image is built on serving the super wealthy and the Wall Street elite, so this was done intentionally. However, consumer banking is superior in many respects, including profitability, market size, and company quality. It is not as cyclical as the M&A or mergers and acquisitions industry, and since it's not dependent on the health of the capital markets or IBO pipelines, it is immune to the loss of commission income that occurs when stock markets decline. Moreover, consumer banking is a more stable enterprise with a significantly larger total addressable market, since it relies on the steady flow of deposits from individual customers and lends a portion of those deposits to borrowers in the form of credit cards, mortgages, and business loans. Because of this, all of the major banks have large consumer-facing operations, including JP Morgan Chase, Bank of America, and Citigroup. In 2016, Goldman Sachs introduced Marcus in an effort to stop missing out on the lucrative consumer banking market. After its namesake founder Marcus Goldman, Marcus is a digital banking platform for ordinary people. Marcus provided several banking options for consumers, including checking and savings accounts, in addition to loans and credit cards. With no hidden fees and no minimum deposits, the platform was built to give clients a stress-free banking experience. Furthermore, Marcus concentrated on providing personal loans to consumers with high credit ratings throughout its first year of business. These loans have no hidden fees or charges and were made to be basic and easily understandable. Additionally, the loans were provided at competitive interest rates, which helped draw in a significant number of clients. In 2017, Marcus added high-yield savings accounts to its product lineup. These accounts provided consumers with no fees and better interest rates than traditional savings accounts. Consequently, Marcus was able to solidify its position as a serious participant in the consumer banking sector as a direct result of the positive response that the launching of the savings accounts received from clients. In 2019, however, the Apple credit card represented their largest gamble yet. As the card's issuer, Goldman Sachs helped launch the card in tandem with the company. The seamless integration of the Apple Card into the iPhone user experience was the proposition offered to consumers. It has the same perks as other major credit cards, such as cashback and detailed expenditure reports organized by merchant type. Aside from this, it also works with Apple Pay, which is already widely used. It's all done using the smooth user experience that iPhone users have grown accustomed to, rather than requiring them to utilize a Chase Bank or Bank of America app. Apple wants to take advantage of its loyal client base to gain control of the consumer banking market. Goldman Sachs was also eager to capitalize on their Wall Street reputation and strengthen their brand new consumer banking business. So, a partnership between the two firms appeared to be a perfect fit from the beginning. But the deal between Apple and Goldman Sachs about the Apple Card was far more one-sided than it originally seemed. The first agreements between the two firms were structured in such a way that the Apple Card would be available to the maximum number of iPhone users. Furthermore, the card also offered low interest rates and no fees. Apple, which wants to provide iPhone consumers with the best experience possible, benefited greatly from these agreements. However, for Goldman Sachs, this meant high risk and little reward. Two things a financial institution never likes to hear in the same statement. According to CNBC, the charge-off rate for the Apple Card was close to 3%. A charge-off occurs when a credit card customer is 6 months or more behind on their payments. In contrast, the charge-off rates for Bank of America and JP Morgan are each only about half as high. And unlike some of its rivals' cards, the Apple Card has low interest rates and no fees. So, there is a lower income stream to make up for the extremely risky borrowers for Goldman Sachs. Apple just wants to provide its consumers with the best user experience possible, so they will buy more iPhones and increase their market share. It doesn't matter if the Apple Card's financials are strong, because Goldman is the one holding the bag. And with such a massive user base of loyal iPhone consumers, they are in a better position to negotiate. In other words, they effectively forced Goldman to collect loose change in front of a steamroller. In fact, Apple's terms were so disadvantageous that many other banks, including JP Morgan, Citigroup, and Barclays, rejected collaborating with Apple on the Apple Card. But when you're in a desperate position, you could be ready to take risks that others wouldn't. All of this adds up to enormous and growing losses. Goldman's platform operations, which include the Apple Card, incurred a pre-tax loss of about $2 billion in 2022. This is an increase from a loss of $1 billion in 2021 and a loss of $800 million in 2020. To put that into perspective, Goldman's overall net income in 2022 was close to $11 billion. So the pre-tax loss from the Apple Card is almost equal to 20%. Goldman's failure to earn money in its consumer banking division is a significant setback for the Wall Street titan, recognized for its risk management skills. CEO David Solomon declared a partial pullout from consumer banking at the start of 2023. Consumers can no longer open bank accounts through Marcus, and the company will no longer provide unsecured personal loans. Goldman has also renegotiated its terms with Apple to make the Apple Card more profitable for the company. But the company's restructuring in the fourth quarter of 2022 is possibly the most compelling evidence of this multi-billion-dollar failure. The consumer banking business was once merged with Wilton Asset Management, which had historically catered to institutional and high-net-worth clientele. It was announced during the fourth quarter of 2022 that the Apple Card would now be included in the Platform Solutions division of the company's financial reports. Since taking over the helm of the firm, Solomon has come under fire from analysts and senior Goldman officials for his management style. Prior to Solomon, Marcus ran like an independent startup, but with the support of one of the top top Wall Street investment banks. As Solomon took over, he argued with Marcus's executives on matters of leadership, which resulted in numerous high-profile resignations. Consequently, Marcus became less flexible and incapable of making independent business decisions due to the considerably tighter oversight it was subjected to. Solomon now appears to be finally accepting this truth, as the Apple Card has been restructured into a distinct division of the business once more. The failure of Goldman Sachs' consumer banking effort and Apple Card initiative revealed that a company's prior success does not guarantee future success in new ventures. With its trading and management companies, Goldman has been the undisputed leader in the investment banking industry for decades, having advised some of the most high-profile IPOs. Yet for some reason, they lost focus on their elite clientele and were fixated on the notion of being everyone's bank. Thank you for watching this far. Please leave a like, subscribe to help us expand our future audience, and comment down your thoughts in the comments section. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. Stay safe and look out for the next video.